Good morning, students. Namaskar. Good morning. Sat Sri Akal, Vanakkam, Kem Cho, etc. So I'm again C. Ankish Sharma, your income tax faculty, and we are about to start our fourth session of salary topic. In last three sessions, we completed the concept of salary, of course, basic salary, allowances provision, compensations, perquisites, etc. And the most important perquisite valuation rules, that was regarding rent-free house and car perquisite, we also completed that. Today, we need to complete some more perquisites and a topic of relief and some questions also. Before starting the topic, as I always do, let's share a beautiful quote for all of you. And before that, today is also going to conduct an MCQ test. So I hope you must all have paper, pen, etc. with yourself. So start MCQ test first of all. And after that, I'll share that quote, what I generally do for every day. So our MCQ test is now day 3. Okay. So today, first MCQ is Rakesh received 25,000 rupees per month as basic salary from ABC Limited. He is also provided DNS allowance, forming part of your retirement benefit. Just a second. Forming part of your retirement benefit. I hope now you are able to see. Okay. So Rakesh received 25,000 per month as basic salary from ABC Limited. He is also provided DNS allowance 10,000 per month, forming part of retirement benefit, and has been provided rent-free accommodation in Alwar. Population is 15 lakh, which is owned by the employer. The market rent of such accommodation is 5,000 per month. The taxable value of rent-free accommodation will be. Always remember, after reading the question, do not try to solve it. Do not try to solve it, because first of all, try to recall the provision. First of all, try to recall the provision and try to implement your question with that provisions. Then you will start solving that question. If after reading the question, you start just solving it, okay, fine, I'll do this, that might be you are going to solve it wrong. So first of all, you should understand that it's a rent-free house provision case. And in rent-free house, it's not a government case. It's a other case. In other case, first of all, we need to check it's a owned case or rent-paid case. So now you should understand in question number 1, is it a rent-paid case or the property is owned by the owner? So it's a owned case or property rented by owner case. So a lot of students will be confused. They will say it's a rental case. No. Always remember, if in the question it is only given that the rental value of that property is so much of amount, the rental value of that property, the market rent of such accommodation is 5,000. It does not mean that this property is on rent. Until otherwise, it is given in question that rent paid by your employer is so much amount. Rent paid should be there. If rent paid is not given, only fair rental value, market rent is given, then the case will be as property owned by employer, not as on rent. So in this case, to confuse you, this is given the question also. The market rent of such accommodation is 5,000. So might be you will be start solving this question assuming that the house is on rent by or on rent with the employer. But no, because rent paid is not given. So we will solve it as house is owned by the employer. And now when it's the case is when house is owned by the employer, we need to find the population. The population is 15 lakh. So we will apply 10% of salary. Now you should start solving the question. We finalize that it's a rent-free house question. We finalize it's a owned case provision. We find out that 10% of salary will be applicable in this question. Now you start solving, find the salary and then apply 10%. You will be having your correct answer. So I'm waiting for your answer. Let's see. Okay. A lot of good morning also here. Janish, good morning. Khushi, good morning. Anisha Ojas, good morning. Rohan, good morning. Jab tak I'm saying good morning to everyone, please solve it and send me the answer, of course. Jyoti is good morning. Okay. Vaghela, of course, please explain rule number 2B. I have already explained rule number 2B for LTC. Kindly see the last session and please, what we already discussed, do not ask these questions. Okay. Rohan again, good morning. Anand, good morning. Mahima, good morning. How are you? I am fine, Mahima. How are you? I hope you all are fine. Okay. Manish Ben Panchal, good morning. Good morning. Chanchal, good morning. Sapna, good morning. Alo, good morning. Everybody have a very, very, very good morning. So answer is start coming. Jyoti is saying the correct answer is A. Very good, Jyoti. High five from Wi-Fi. Correct answer. Alok is saying A. The correct answer is, of course, A. The salary, what is the salary for the purpose of rent-free house? Of course, that's basic salary and dearness allowance, forming part of retirement benefit. So now we have 35,000 per month into 12, that will be 420, and then 10% of that will be your answer. I uploaded the solution of last MCQ test, and I'll upload also again the solution of this MCQ test with the correct option and the detailed solution also. Next is Chavi received 25,000 per month as basic salary from ABC. She also received DA 15,000 per month, forming part of retirement benefit, and has been provided with rent-free accommodation, which is taken on rent in Delhi. Population is 25 lakh exceeding. Employer has paid monthly rent. Now in the question it has been given that employer has paid monthly rent. So now this is a case of house is on rent. So now we will apply the provision, and if house is on rent, then the population is irrelevant. If house is on rent, then the provision will apply 15% of salary or rent paid, whichever is lower. Kindly find out the solution and send me the correct answer. Shruti is saying good morning, sir. Sorry for joining late due to network problem. Okay, no problem, of course. Kushi, okay, correct answer is A. Question number 1, correct answer was A, correct. So what is the correct answer of question number 2? I am waiting for your answers. Please give me correct answer fast. Okay, so answers are coming. Question number 2, correct answer is option C. That is 72,000. Because Chavi received 25,000 and D is forming part of benefit, that means it will be 40,000. 40,000 and 15% of 40,000 you need to take. 40,000 into 12, the yearly salary, and then a 15% of that, and comparing with the 10,000 rupees of rent per month. So rent paid is 1,20,000, and that might be 72,000. So the correct answer is, of course, 72,000. Salary was 4,80,000. Detailed solution I will upload today. Do not worry. Okay. Correct answer is C, not D. Lower is going to be taxable. 15% of salary, that is 4,80,000. 15% of that or rent paid, whichever is lower. So lower will be 72,000. Question number 3. Chavi received 25,000 per month basic salary from so and so. She also received DA 15,000. She has been provided a rent-free accommodation owned by employer with effect from 1st October 2022 in Delhi. Population exceeding 25 lakh. Again, the market rent has been given. So that is the case now will be treated as house owned by the employer. Until otherwise rent paid by employer is not given. Till then, we will assume it as house owned by employer case. So in this case, what will happen? House owned by employer, population exceeding 25 lakh, we will take 15% of salary, and that is only for 6 months. Because house has been provided from 1st October. October, November, December, January, February, March. What will be the correct answer? Kindly send me fast. Okay, let's see who is giving the correct answer of question number 3. Somebody is saying A. Who is saying say? Okay. Petla Dubla Kojima is saying A. Janesh is saying again A. I need more answers. Okay, somebody says 36,000, managed by Ben Panchal, of course. Manoj is saying 30,000. Rohan, do not write the answer like 36,000. Please write the correct option. I have already told you, of course, in last classes. Okay, Rohan is saying A. So almost everybody is saying the correct answer is A. Miss Shruti is saying B. Wrong, Shruti. It's a wrong answer. Question number 3, correct answer is A. I will send the detailed solution if you having any problem in the solution. Do not worry. Question 4. Shavi received 25,000 per month as basic salary from ABC. She also received DRBs 15,000 per month, forming part of retirement benefit and has been provided a rent-free accommodation. Is Delhi. With effect from 1st April 22. The accommodation is owned by employer. The employer has also provided furniture. Now, this is a case of furnished rent-free house. Again, for furnished rent-free house, we first need to calculate unfurnished rent-free house provision. So, and then we will add the furniture value in that. The market rent of such accommodation, again, market rent is irrelevant. We will solve it as house is owned by the employer and we will take 15% of salary for that. And then we will add the furniture value in that. So kindly solve it and send me the correct answer. Question number 4. Remember, for calculating the taxable value of furniture, we will take 50,000, 10% per annum. And because furniture has been provided from 1st October, then we need to calculate 10% per annum. And that is only for 6 months value. So what will be the correct answer? Alok is saying option A. Well done, Alok. Correct. The correct answer is, of course, A. Alok, very well done. Next is question number 5. Remote area means an area that is located at least so much kilometer away from a town having a population not exceeding dash based on latest published All India census. So I just need to ask how many kilometers and the population, because in the correct option, kilometer has not been defined. So let me tell you, the kilometer was 40 kilometer away from a town having a population. You just need to tell me the correct population, how much population that must be, and fill in that blank. First fill in the blank will be 40 kilometer. I need to ask you the second exceeding so much of population. So you need to tell me the correct population to find out what is the meaning of remote area. It is very simple. It has already been written in the notes. Rent-free house provision. The correct answer is 20,000. It should be the correct answer. 2 are correct answers. Sorry, it's my mistake. Let me change this. If this is 30,000 and this is, say, 50,000. So the correct answer will be 20,000, of course. Now the options are correct. Clear? It's a very simple question, of course. Nothing to explain in this. Now we are moving on to car per visit question. Some students ask me, sir, please solve some car per question. So here we are with our car. Wow. Employer provides a car below 1.6 liter capacity. It can be 1600 cc is equivalent to 1.6 liter. So if I'm saying 1.6 liter, that means below 1600 cc. They are same thing. So employer provides a car. So car belongs to employer. I told you that first of all, you find the case where it is false. So if employer provide a car, so we are talking about the second case, along with the driver to X, partly for official and partly for personal purpose. So now we know who has provided the car, employer. Now we know it has been used for both cases. The last thing we need to know who is actually paying the expenses. So the expense incurred by the company are, again, car is belongs to employer, expenses paid by employer, and it's used for both purpose. And capacity is less than 1600 cc with a driver. So which case in this question falls? It is in the last case. Car employer, expenses employer, used for both purpose with driver. Now you know how much we need to taxable. There's a fixed limit what we need to taxable. The maintenance expenses and driver salary are irrelevant. We need not to do anything with that. So we need to find out the taxability value on the basis of the fixed percentage. And that is how much it should be. It's less than 1600 cc. So we all know what amount should going to be taxable for car and as well as for driver. I'm waiting for your answer. Question number 6. Which limit will be applicable if car is below 1600 cc? The correct answer is, of course, C, because it will be 1800 rupees per month plus 900 for driver. Into 12, that will be 32,400. Next is Garima received 25,000 per month as salary from ABC. She also provided DA 1,500 per month, forming part of retirement benefit. She has been provided motor car. Again, car has been provided by the employer. Engine capacity more than 1.6 liter. That means more than 1600 cc. Owned by employer for her personal use. Now, car has been used for personal purpose. Provided by employer. So, we are talking about the second case. And use is for private purpose. Expenditure is already maintained by the, of course, the employer again. So, car is provided by employer. Expenses met out by employer. And it is used only for the purpose of which private purpose. Now it says running maintenance expenses is 15,000. The taxable value of car facility, how much it will be? Question number 7. I am asking what is the correct answer. Garima received 2,500 rupees per month as basic salary and DA is 1,500 rupees per month. So you need to tell me the correct option out of these 4 for this question. Question number 7. Let's see. It's a very good question. Let me tell you, it's a very good question. Let's see who can solve it. If you can solve it, that means you know how to read a question. How to solve the question? No, I am saying if you're able to solve it correctly, that means you know how to read the question first before solving it. Okay. So I'm just waiting for the answer. Let's see. Question number 7. Somebody say A. Alok is saying A. Jyoti is saying A. Khushi is saying nil. Okay. More answer I need to see. Okay. Gurleen Kaur is saying 15,000. Okay. Just Shai is saying B. Mr. Vora is saying B. Mahima is saying A. Jyoti is saying A. More answer over it. This is the very, very good question. And the correct answer is, let me not take a lot of time because we need to cover a lot of questions also. The correct answer is D. That is nil. Now you must be surprised. Why D? Because car has been provided by employer. And that's a second case. And second case is only taxable for a specified employee. Remember, second case is only taxable for a specified employee. And what is the meaning of a specified employee? You are an employee plus director of a company, or having a substantial interest in that organization, or having cash salary more than 50,000. Now, in this case, you can see that cash salary is not more than 50,000 because it's just 2,500 plus 1,500. That means cash is 4,000 per month into 12. That means 48,000. So that means Garima is not a specified employee. And because she is not a specified employee, so this perk will not be taxable in her hand. That is the question. You should understand, examiners are very sharp. They are more intelligent than you and me, I guess. So when you think some question is very easy, that might be, it is not that easy. So I trapped you in this question because from last 2 questions, it was not happening. We are not checking it. But when you apply the provision, always think about the provision in detail, that he is a specified employee or not. Okay, so correct answer was 7. Eighth, Mr. Gupta is given a motor car, this chauffeur, by the employer, which is used for both official and personal purpose. The entire running expense of the car amounting to rupees 64800 was met by the employer in the previous year 22-23. Okay, you can solve it yourself because I just need to move on to our provision section. Question number 8, I am telling you the correct answer. Question number 8, correct answer is B. And question number 9 is for medical provisions. That is a good question. The correct answer of this question number 9 is C. That is 1,60,000. Let's discuss this question because that's a different question. In medical facility, when you actually done the treatment outside India, in this case, the treatment has been conducted outside India, in that UK. The provisions say the traveling expenses exempted up to RBI limit. In this question, it has not been mentioned what is the RBI limit. So if question is silent, you can assume whole amount is exempt. For stay purpose, total RBI permit 45,000 and actual expenditure was 70,000. So that means only exemption will be 45,000 and the balance, that means 25,000, is going to be taxable. This is going to be exempted. Traveling is full exempted. Taxable value we are finding out. So this is going to be taxable. And for treatment purpose, that was 50,000 permit by RBI, but the actual expenditure was 20,000. That is going to be taxable. The actual expenditure was 70,000. So balance is going to be taxable. So out of these medical facility, only 45,000 is going to be taxable till now. It says that calculate his annual income from salary was 1,56,000. Question says that his salary was 1,56,000 before including the above perquisite. Find out taxable medical perk value. So now we need to find out in this question the taxable value of perquisite, not the gross salary. We just need to find the taxable value of perquisite. So can we say it is 45,000? It is not that simple. No. Because in case of person having treatment outside India, if GTI up to 2 lakh rupees, then it's okay. Per taxable value must be 45,000. But if GTI, if the gross salary and GTI exceeding more than 2 lakh, then in that case, traveling expenses also going to be taxable. So now in this situation, we need to find out our GTI. So GTI is 1,56,000 before including above perquisite. And now this perquisite is going to be added in the GTI, the taxable value. So now the GTI, we can say it's 2,01,000. It's exceeding 2 lakh rupees. And because it's exceeding 2 lakh rupees, now the travel what we exempted earlier is going to be taxable. So the medical facility earlier taxability was 45,000 and now because GTI exceeding 2 lakh, this travel value perquisite exempted amount is again going to be taxable. So total taxable value is now 1,60,000. So correct option answer is this C. So that's a very good question. I just solved it for you. I will send also the solution in detail. So now we are moving on to our before moving to our provision, let's share today's quotes. So this is today's quote, of course, for all of you. And you know, we all know he is Swami Vivekananda, great person. We all know about him. And he said, arise, awake, stop not till the goal is reached. So arise does not mean that you should wake up from your sleeping hours. That's not the meaning of technically awake and arise. Some people are technically sleeping even when they are practically not sleeping. Because you do not know that you should awake for your goal. You should try to achieve. You should try whatever you can to achieve your goal. So what is your goal in this life? Your goal is to become a chartered accountant. So for completing, to fulfill this goal, you need to arise, you need to awake, you need to be sincere, you need to understand that is about your future. Nobody is going to help you. You have to help yourself. You need to awake, you need to be sincere, and do not stop. That's very important thing. The stop not is the best thing out of these three: arise, awake, and stop not. You should have patience. CA is a course which needs your time. It does not mean that if you are not able to clear it once, you need to quit it. No. If you want to leave the CA will not leave you. So if you think that you are not able to clear your group at once, do not consider yourself as fail, because we are fail when we quit something. So if we are not quitting, we are trying again, the moral of the story, we need to be a CA. So what happened generally when we did not able to clear the group? We feel we are failed, because this is our mentality. This is since birth. That is kind of society we belongs, that if we are not able to clear, we are not a good person. We are a failure. But it's not correct, the definition of failure. Failure means when you quit something. There are a lot of sportsmen who participate in Olympics, and they might not be succeed in first attempt, second, third, or fourth. But if they succeed in their entire life, that means the success is yours. You actually achieved your goal. So if you are not able to clear your attempt in one or twice, then do not treat yourself as failure, because people will say, you failed, you cannot able to do this course, you won't be able to do this course, it's a very difficult course. No, do not think what they are saying. Just believe yourself, trust yourself. And if you will work hard with patience and with correct planning, there is no chance that you won't be able to become a CA. You will be a CA, and definitely you will be a CA. Fine. So let's moving on to our notes section. We actually discussed the provisions for car perquisite, and now we are moving on to our some rest of the perquisites. They are very simple. They are not much difficult. They almost have same provision, only sweat equity share provisions, and I guess one or two provisions are different. Almost others are same. So valuation of benefit of provision of domestic servant. So they are theoretical provision. I'll explain you the concept of it, and then you can read it later. So if employer provides you a domestic servant for your household work, so that is an obligation of employee met by employer. So the amount of salary the employer is reimbursing for that domestic servant will be your taxable perquisite. There is a thing you need to understand. If you appointed that domestic servant yourself, and the salary is paid by employer, so this kind of perk is going to be taxable for all employees, whether you are a specified employee or not a specified employee. But if the domestic servant has been provided by the employer, and of course salary is paid by the employer. Of course, if salary is paid by you, then it's not a perk. So if salary is going to be reimbursed directly or indirectly, in that case, it will be treated as perquisite. In the same case as in case of car. If car is yours, that perk is taxable for all. But if car belongs to employer, that is going to be taxable for specified only. In the same case, in case of domestic servant, it will be a perquisite in the hands of all employees. When taxably it is appointed by the employee. But if the domestic servant are engaged by the employer, if it has been appointed by the employer for you, for your household work, so that's a special nature of employee. That must be a special employee. So that is going to be taxable only for in case of specified employee. Again, whatever employer is paying, if something has been recovered from you, then it's going to be reduced from the taxable value. We all know that. Again, same in case of if your gas, electricity, or water supply bill is paid by employer. And if bill in your name and it's paid by employer, it's taxable for all employees. I already highlighted that. But if the bill is in the name of employer and it's paid by employer, then it's only going to be taxable in the hands of a specified employee. For example, if employer has provided you a rent-free house that is owned by employer, and the electricity connection, of course, in the name of employer, because he's the owner of that house, and he say, I'll pay the electricity bill. In that kind of electricity bill, it is going to be taxable only in the hands of a specified employee. And if you are the person in the name of which bill are coming, in that case, it's taxable for all kinds of employees. Okay. I have made a simple format of these perquisite also. We will discuss it. Like in case of domestic servant, gas, water, electricity, education facility, free concession tickets, credit card facility, and club expenditure. We will read it one by one. We just discussed the domestic case and the gas case. In all this case, this is the common provision. If bill in the name of employee, it's taxable for all. If it is in the name of employer, it's taxable only for specified employees. And the generally taxable value is technically the expenses paid by employer for you. Moving on to our notes. So with the help of that small format, you can understand the whole perquisite of these kinds. Taxable value if payment is made to agency supplying of gas, electricity, sum equal to the amount paid on that account by the employer. So if the gas, electricity, water connection is purchasing from some other agency, then the amount paid by employer for you is going to be taxable perk in your hand. If supply is made from resources owned by the employer. Now imagine your employer is actually, you are working in a electricity company like Torrent Power, and your employer is actually providing you the free electricity. So if gas, water, electricity is provided by your employer by his own resources, then manufacturing cost per unit is going to be taxable as a perquisite in your hand. And if he is purchasing these things, he is paying to the outside agency, he is not the manufacturer of these things, then the amount paid by him technically is going to be the taxable value. Any amount received from employee is going to be, of course, reduced. Valuation of free or concessional education facility. Again, same provision. If it is bill in the name of employee and paid by employer, it's taxable for all employees. But if school is maintained by employer, assume you are working, you are actually teaching in a school which is owned by employer or which is run by employer. In that case, this perk is going to be taxable only in the hands of a specified employee. Here's a special provision in this case. If the school is run by employer or maintained by the employer, then whatever amount of taxable perquisite will come up to rupees 1,000 per month per child is going to be exempted or not going to be taxable as perquisite. Like this. This is the important circumstances. If the educational institution is maintained and owned by the employer, or if free education facilities are allowed in any other educational institution by reason of his being in employment of the employer. So if the school is maintained by the employer or because you are the employee of that employer, some education institute is providing your child free education. In that case, the provision is same, cost of such education in a similar school. So we will find out what is the technically market value of that fees. We can say that some other school, whatever amount the other school is charging, like you are a teacher of your employer, of course, you are teaching in any school and your employer said that your children can also study in that school without paying any fees. So how much taxable value we will see. If my child is going to be study in the same kind of any other institution, then that fee will be the taxable value, but there is a benefit of, and that is 1,000 per month per child. For example, a similar school is charging. I am an employee and my employer is saying, I am an employee in a school. And my employer say you can, your child can be studied in our school without paying any fee. And this is happening. I have 3 children. All of them are actually studying in the same school. And their fees is, for example, 1,200 rupees per month for each child, which my employer is bearing. I am not going to pay anything. So 1,200 rupees per month per child. So up to 1,000 per month per child will be exempted. 200 rupees per month per child is going to be taxable. Remember, there is a concept of children education allowance, and that is 100 rupees per month per child for 2 children only. There is no limit of child over here. There is no limit of children. If I have 3 children, even then 1,000 per month per child is going to be exempted. Other case, that means where your employer does not own that school. That means when it is applicable for all employees and going to be taxable for everyone. I am working in a bank and my employer say your child is studying anywhere in any school, we are going to pay. So in that case will fall in other category. In other category, there is no benefit of 1,000 per month per child. The whole amount is going to be taxable. Okay. Next is free or concessional tickets. They are very simple provision. There is no technical provision in these all packages. You will read it once and you will find out it's easy to be implemented and solved in the question. The value of any benefit or amenity resulting from employer by an employer, resulting from the provision by an employer who is engaged in the carriage of passenger or goods to an employee or to any member of his household for personal or private journey free of cost or at concessional fare, in any conveyance owned, leased or made available by any other arrangement by such employer for the purpose of transport of passenger or goods. For example, my employer is running a bus services and he's providing me the journey facilities out of his bus services. Then what is going to be taxable will be over here like this. Employer for the purpose of transport of passengers shall be taken to be the value at which such benefit or amenity is offered. So what amount is going to taxable? If this facility, similar facility has been provided to the public, then what amount is going to be charged from them is going to be taxable. For my example, my employer is in bus transport business and I'm going from Agra to Delhi. The ticket is 500 rupees and he's not charging anything from me. Then from public, he's charging 500. Then that 500 is going to be taxable my per kilometer value. But this provision is not applicable in case of employee of an airline or railway. In that case, there will be no such per kilometer applicability. In that case, that is going to be 100% exempted. Valuation of other fringe benefit and amenities, very important cases, interest-free or concessional loan. It's very, very, very important because it has some practical applicability, some numerical applicability. And it says if your employer provide you interest-free loan, you need 10 lakh rupees, your employer say, yes, I'll give you 10 lakh rupees loan and I will not charge any interest. So what is the perk value? The perk value is the interest what we are not going to pay. If I'm taking that loan from some bank, then I need to pay interest amount. Or concessional loan. Concessional loan means if the rate of interest in market is 10% and an employer say, I'll only charge 6% from you, then the benefit of 4% is going to be taxable as your participant. The value of benefit to the assessee resulting from the provision of interest-free or concessional loan for any purpose made available to the employee or any member of his household. The rate will be taken for the purpose of this as State Bank of India. It will be given in question that the market rate is State Bank of India market rate is this percentage and your employer is charging this percentage. So for example, SBI rate is 10, employer is charging 7%, then 3% is going to be taxable. Employer charging nothing, then 10% is going to be taxable. Employer charging 10%. Market rate 10, employer charges 10%. There means there is no perquisite. Okay. How we will calculate that interest? That is an interesting provision. So how we need to calculate the interest? That is an interesting provision. And how it will happen? It will calculate like this. Please read it carefully. What I'm saying, please read it carefully. It says, during the relevant periods, by the employer or any person of an household shall be determined as the sum equal to the interest computed. Read it carefully. Interest computed at the rate charged per annum by the State Bank of India as on the first day of the relevant previous year in respect of loan for the same purpose advanced by it to the. This is the main point. Outstanding maximum monthly balance. Maximum outstanding monthly balance. The interest will be charged on this amount. Maximum outstanding monthly balance as reduced by the interest, if any, actually paid by him or any such member of his household. Maximum outstanding monthly balance means each loan as on the last day of each month. We need to see the balance for each loan at the last day of each month. So whatever is the balance at the end of every month, we need to charge interest on that amount. Again, as I always say, whenever you read the provision for a numerical topic, you always feel it difficult, confusing, etc. Oh my God, how it will happen? Just relax. We will solve a numerical of it and you will find out how easy it is. It's proper mathematics. That's it. The provisions say we will compare it with the SBI rate, and on which amount we will compare the balance for each loan as on the last day of each month. So we need to find out in the whole year, in every month end, what is the closing balance, on which balance we need to calculate the interest to find out the taxable value of that purpose. We will solve a numerical question of this today. Do not worry. Next, it says there will be no perquisite if the loan has been taken for medical reason or the loan amount does not exceed 20,000 rupees. Sorted. Next, valuation of traveling, touring and accommodation. So if you going for a traveling purpose, traveling means for personal purpose, and an employer say, we will reimburse your all expenses. For example, in LTC, employer only reimburse the travel expenses. But in this case, now we are talking about the whole package. Traveling, stay, etc. So if traveling, stay, etc. is provided, that will be solved as per this provision. If it's only for ticket or journey provision, then the LTC provision will be applicable. So in travel is very simple, where such facility is not given to all employee, then value at which such facilities are offered by other agencies to the public. Technically, the FMV is going to be taxable. Where such facility is given to all employee, then actual expenditure borne by the employer is going to be taxable value. Clear? Tour. If the tour and difference between tour and travel is for personal purpose, tour is generally for official purpose. So if your employer is sending you for a tour of 5 days for his official meeting outside your job premises, outside of course station, in that case, that is not going to be taxable because that's a payment which is for the official purpose only. But what if tour is converted into some part into travel? For example, you are going for 5 days official tour to Delhi, but you take one family member also with you. An employer say, yes, we will pay his expenditure also. In that case, that will be treated as personal expenditure of your that family member. So whatever amount is spent by the employer on your family member, that is going to be treated as a perquisite. It's very simple. If employee is on official tour and expenses are incurred in respect of any member of his household, then actual expenditure for that household person is going to be perk value. And if you are going for official tour of 5 days, but after 5 days you say, I want to travel for 2 days more. I have completed my official work. Now I need 2 days to travel this place. And employers say, okay, you can travel. Then what is going to be taxable? The amount of that 2 days is going to be taxable. Official tour extended as a vacation. Then expenses on that vacation time period is going to be taxable. Free concessional food, etc. Provision says, if you have been provided with tea or refreshment, the taxable value is nil. Well, we already discussed this also. Free meals during working hour provided in a remote area, that is also going to be exempted. But free meals provided during office hours with the vouchers non-transferable, then 50 rupees per meal is going to be exempted. We have already discussed it earlier also. Value of gift and voucher, etc. The value of any gift or voucher or token in lieu of which such gift may be received by the employee or any member of his household on a certain occasion, otherwise from the employer, shall be determined as a sum equal to the amount of such gift. However, the value of such gift or voucher or token, as the case may be, is below 5,000. In the aggregate during the previous year, the value of perk shall be nil. So if your employer is giving you any kind of gift, then up to 5,000 rupees, it's going to be exempted and balance to be taxable. Here is actually two views over here. One view is this, that if you are receiving 7,000 rupees gift, one view say that up to 5,000 exempt and balance is 2,000 is taxable. Other view say that if it is up to 5,000, the perk value will be nil. But if it is exceeding 5,000, then full value is going to be taxable. For examination, you can use any view, but you should write that which view you are going to be used. From my point of view, the first view is better. You should exempt it up to 5,000 and balance is need to be taxable. Credit card expenses, any credit card expenses paid by employer for yours for personal purpose is going to be taxable. But if any credit card expenses made by employee on employer behalf for official purpose, that is not going to be taxable. You can read this provision. This is very simple provision. Again, if there is any club facility has been provided, technically, your employer is a member of any club and he allowed you to go to that club and enjoy the facility. For a personal purpose, the amount the amount paid by your employer is going to be taxable. Fine. And again, if it is provided to all the employee for a specified purpose, the value of benefit to the benefit employee resulting from the payment or reimbursement. The important thing is that what is the membership fees paid by the employer at the time of getting the membership. For example, there's a club membership. It is 2 lakh rupees. Employer paid 2 lakh rupees for that. And then that 2 lakh rupees membership is not going to be taxable in the case of employee as a per, even if employee is using the club membership facility. Only after the membership expenses, if anything, bear by the employer on behalf of employee, then only this is going to be taxable. The initial fees paid by employer is not going to be a taxable perquisite in the hands of employee. And if that employee proves that these expenditures for official purpose, then nothing is going to be taxable. There would be no perk for use of health club, sports, and similar facilities provided uniformly to all employees by the employer. So if it has been provided to a specified employee or some category of employee, it is going to be taxable. But if these kind of facilities provided to all employees, then nothing is going to be taxable. Next is valuation of use of movable asset. There is a universal rule. If employer is providing you any of his movable asset, if employer is provided you any of his movable asset, the provision is the use of that movable asset will be treated as a perquisite in your hand. There are 3 categories of asset. First one is if employer is giving you laptop and computer, understand he is not selling it. He is just giving it to you for use. So if the employer is providing you laptop and computer, the taxable value will be nil. If employer provide you car and other asset is specified in rules, then the provision is applicable as per the specific rule. We have already studied the provision of car perquisite. And you, I guess, remember that if employer provide you car, then what we tax? 10% per annum as the actual cost of the car. So if there is car or any other kind of asset which is already been specified in the rules, then taxability will be applicable as per those rules. As in case of rent-free house, furniture has been provided, then we know 10% per annum is going to be taxable. And the amazing thing is that the same provision applicable for all other movable asset. So if any movable asset has been given to you, the provision are same. Technically for car also the same provision, for furniture also same provision, and now for any other also the same provision is here. 10% per annum of the actual cost of asset or amount of rent paid by the employer. The same provision we already discussed in furniture. The same provision we discussed in car perquisite, and again it is same for everyone. So we can say that in case of movable asset, if it is laptop and computer, the taxable value is nil. And for any other asset movable, the provisions are same. That is 10% per annum of the actual cost of the asset or rent paid by employer as the case may be. An important perk is here, valuation of transfer of any movable asset. It says that if employer transfer its movable asset to employee, now he technically going to sell his asset to an employee. Then what amount is going to be taxable? The provision is very simple. Whatever is the fair market value, we can solve it like this. Transfer of movable asset. So it says, technically, what is going to be taxable as per? It says the fair market value of that asset at the time of transfer minus amount received from employee, any amount paid by employee. For example, there was an asset of fair market value was 2 lakh rupees and from employee we recovered 1,60,000. Then taxable value will be 40,000. The main problem is how to find this value. what we are saying FMV for your convenience. This is not technically FMV. There is technically a value we need to compute as per the provision given. And it says, if it is computer, then the values, this FMV or the value need to be find out for the taxability of perquisite will be find out as follows. It says 50% debt as reducing balance method will be applied for each completed year of use by employer. After applying 50% depreciation every year, every completed year of use by employer, the remaining value will be treated as this value. If it is computer, if it is car, then the rate will be 20% per annum. And if it is others, then 10% per annum, but the method will be SLM. So it has been written in the diagram. Computer and electronic items means data storage devices like digital diaries, printer, etc. Not TV fridge. TV fridge will not fall in first category. In electronic item, they will fall in third category. Actual cost of such asset minus 50% of the cost of each completed year. That asset has been used by employer on reducing balance method. Same, the rate is now either 20% and same method, but in last case, that is 10%, the method is SLM. Practically, how it will be solved like this. For example, if given in question that employer purchased a laptop, if laptop computer has been provided to you for use, then it's not a perk. But if it has been sold to you, then it's going to be perquisite. A laptop for 1 lakh rupees, and after 2 years and 8 months, in previous year 22-23, it has been transferred to employee for rupees 18,000. So now we need to find out the FMV, or we can say the computed value for the purpose of this perquisite. So we need to apply depreciation for only 2 years with the 50% DAP rate. So DAP rate is 50%. First year DAP completed is 50,000. Balance is 50,000. Second year 25,000. Balance is 25,000. And this is now the technically our FMV, what we say over here FMV. So 25,000 rupees has been transferred to the employee for 18,000. So taxable perk value is 7,000. If it is not laptop, for example, if it is a car and it has been transferred to employee for 40,000 rupees. If it is a car case, not a laptop case, and if it is transferred on 40,000 rupees, not 18,000, then how it will be solved? 1 lakh rupees. That's 20% DAP, that is 20,000 for first year. Balance is 80,000. Then 16,000 for second year. Then balance is 64,000. Now 64,000 car has been transferred to you for 40,000. So that means the taxable value of perk is 24,000. But if it is any other, for example, it is a television. Now the rate of SLM will be applicable. In case of SLM, the 2-year DAP will be, first is 10,000. Value is 90. Again 10,000 because SLM method. Now the 80,000 value. For example, this TV has been transferred for 70,000 rupees to employee. So in that case, 80,000 things has been transferred to you for 70,000. Taxable value will be 10,000 in this case. It's a very simple thing. It's a very mathematical thing. Simple depreciation. These DAP rate does not have any connection with the DAP rate normally we claim under our business head. This is depreciation rate is specifically given only to applicability of this provision when any asset is transferred by employer to his employee. Okay. So this is the table. Valuation of specified security or sweat equity share for the purpose of section 17(2). So technically we can say, I guess this is our last perquisite valuation rule. After this, we can move on to our, yes, this is the last provision. We will move on to our that deductions provision, and then we will left with the relief provision. And then I will solve the question relating to interest provision, what we discussed today, and the full question of salary we're going to discuss today. So what is the meaning of sweat equity share? We discussed earlier, if any employee is getting salary from the company for his hard work, because he was actually working for the company from the inception of the company. So to just thank him or her, the company provide him some shares, which is free of cost technically. That is called sweat equity share. So if you are receiving any sweat equity share free of cost or any amount has been charged from you, the taxable value need to be find out with the help of these provisions. How we need to find the taxable value? The provision says whatever the FMV will be the taxable value. It's as simple as that. You are an employee of a company and company provides you 1000 sweat equity share, 1000 sweat equity share free of cost. Their market value is 200 rupees per equity share. So what is the taxable value? 1000 into 200. Simple. That is going to be your taxable value. That is 2 lakh rupees is taxable value. And if employer charge 10,000 for it, then 2 lakh minus 10,000, 1,90,000 is going to be the taxable value for this perquisite. So in most of the cases in the question, fair market will be given. But if it is not given, so provision has been ended over here. It has been complete over. Just a single word provision, the FMV will be the perk value. But how we need to find the FMV? This is the whole provision to find out the FMV. So the provision is only for one line. Then FMV is going to be a perquisite value in case of sweat equity share, etc. But how to find the FMV? That is the provision I'm going to discuss. So let's find out how to find the FMV. I personally believe that in the numerical, it will be given in question that what is the FMV, but if still it's not given, then how we will find the FMV? Here are the provisions. Sweat equity shares. It says that share must be of two types. It might be listed. It might be unlisted. Listed in a stock exchange or not listed in a stock exchange. If it is not listed in a stock exchange, and if it is listed, how it will be calculated? It's like this. It says we need to take the value on the date of exercise of that option. The date of exercise of that option, the sweat equity shares offered to you. So the date you will exercise your option to accept it. That is the date when we need to find the FMV. So the date of exercise option will be given in question. We need to find out the value on that date. And how will we find out? It says the average of opening value plus closing value in the stock exchange of that particular share on which date? At the date of exercise of option will be treated as your FMV. If the shares are listed, then the average of opening value of that share and the closing value of that share will be treated as FMV if that share is listed on a stock exchange. But if it is listed on more than one stock exchange, if it is listed in more than one stock exchange, then we need to find the average of the value, this value of that stock exchange on which the trading is highest volume. If your shares are listed in more than one stock exchange, then we need to find that on that particular day, the day of exercising of option, on which stock exchange the maximum quantity has been traded on of that equity shares. And if might be there are three stock exchange on the third stock exchange the volume of trading is highest, then from that stock exchange the opening and the closing price average will be taken to find out the FMV or the taxability of this provision. Fine. So it's very simple, but in most of the cases the FMV will be given in question. Moving on to notes. This is the whole provision regarding it. Now, after completing our all perquisite, now we have completed our all perquisite, allowances, basic salary concept, etc., etc. Then we are now comes to the gross salary part. As per our format, technically we can say as per the format. So as per the format, technically, now we are on to our gross salary part. There was basic salary, advance salary, area of salary, allowances, bonus, commission, profit in lieu of salary, then perquisites, etc. So after doing each and everything, now we are in our gross salary part. The total of all these things, 1 to 8 as per our ideal format, this is 1 to 8. Now this is called gross salary. Now gross salary, out of gross salary, we can claim 3 deductions. That is called standard deduction, entertainment allowance deduction, and third is professional tax or employment tax deduction. So standard deduction is very standard, of course. And it says 3 deductions are there. Standard deduction is reinserted by assessment year 1920. It has been deleted in earlier years, but again inserted. So what we need to do is forget about it. For the current previous year, of course, we are having a standard deduction. It says how much will be the standard deduction? It will be gross salary or 50,000 rupees, whichever is lower, will be allowed as your standard deduction. So if your gross salary is 10 lakh rupees, then 10 lakh or 50,000, whichever is lower. If your gross salary is 40,000, then 40 or 50, whichever is lower. It's very simple. Now there was an allowance which was entertainment allowance. And we discussed in the allowance section, and I've told you that there's a deduction also in respect of this allowance. This allowance is going to be fully taxable in the above category of allowances initially. But after calculating of gross salary, the deduction regarding this allowance can be claimed out of gross salary. It will work like this. Okay, for unlisted share, we need to find out the taxable value in the specified date, and that is date of exercise of option. Before that, not more than 180 days earlier. How that value will be decided, the merchant banker will find out value for you. That means in case of unlisted share, the value of shares RFMV will be given in question. You not need to find out the value by yourself. Okay. So now the entertainment allowance provision will work like this. For example, in the question, there is given entertainment allowance 2,000 per month. So what we will do, we will taxable the whole amount of 24,000. When we solve basic salary, whatever it is, other allowances, etc. So this 24,000 is going to be the part of the allowances as a taxable value. All other perquisite, etc. will be over there, and then it will be gross salary. So this allowance is not going to be exempted over here. Before gross salary, it's going to be taxable 100%. But we can claim this allowance deduction from gross salary, entertainment allowance deduction. And this is only available to government employee. That is not available to other employee. It's only available to government employee. You need to find out 3 values. The lowest is going to be allowed as a deduction. Clear? For example, assume the lowest of 3 is this 10,000, 5,000. Then 5,000 is going to be deducted from here. So technically, only 19,000 has been taxable. 20,000 has been added in the allowance category and 5,000 has been deducted over here. Still, you cannot show it in the question is directly 9,000 taxable. If some of you is thinking, okay, we will make a shortcut that we will find out the deduction and we will taxable only 9,000 over here. That format will be wrong. So don't do this. First of all, taxable the whole amount before the gross salary allowances section and then claim the deduction if applicable. How we will find the deduction? The format is over here. That is actual amount, 20% of only basic salary and 5,000 rupees. Lower of this is going to be deducted as a deduction out of the gross salary. Professional tax, if it is given in question, is also need to be deducted. But professional tax has 2 scenarios. If it is paid by your employer, if professional tax has been paid by your employer, If in question it has been given, for example, professional tax or employment tax, there will be two scenarios. For example, it is given question that 1,000 rupees professional tax has been paid. There might be two cases. It is paid by employee himself out of his pocket, or if it is paid by employer on behalf of employee, or paid by employee and reimbursed by the employer. So in this case, it will be converted as a perquisite because your tax has been paid by employer. But if it's paid by you only, then it will not be treated as perquisite. The treatment is this: when your taxable gross salary, for example, 6 lakh rupees. And in the first case, when professional tax has been paid by employee himself, we will deduct 1,000 out of gross salary. So 5,99,000, etc. will be over it. We will deduct the same deduction again. But the treatment of this will be like this. We just need to deduct the professional tax paid by employee out of the gross salary. But if it is a second case scenario, this one, when your professional tax of 1,000 has been paid by employer, then in that case, that 6 lakh, 1,000 will be added as a perquisite. So now gross salary will be 6 lakh and 1,000. And then this professional tax will be deducted as a deduction. So now your net salary will be 6 lakh rupees. Clear? So if professional tax paid by employee himself, it's going to be deducted out of gross salary as a deduction. But if it is paid by employer on behalf of employee or reimbursed by the employer for his employee, then it's going to be taxable as a perquisite initially, and then it's going to be deducted as a professional tax deduction. So that was deduction concept. Now the relief concept has been left. So relief notes I have uploaded yesterday. Separate notes I have uploaded yesterday for better understanding, because relief is not a technically a concept. It is just a calculation, I can say. It's just a process. There is no new provision for relief. It just, you need to understand it's a different kind of process, which you need to understand in this section. So what is relief? How it works? It applicable when there is a case of arrear of salary. You might be remember when we're discussing about the arrear of salary, I've told you that we will discuss this case in detail when we will discuss the provision regarding the relief. It is also applicable in case of advance salary. So relief is applicable in case of arrear of salary, again in case of advance salary also. It is applicable in case of pension also. It's also applicable in case of gratuity, retrenchment compensation, VRS also. So why it's applicable, how it's applicable, that we will discuss with my other notes, what I have uploaded yesterday. Fine. So let's discuss these provision of relief. This is relief. With a solved numerical, we are going to solve the provision over here. And you will see there is no new provision I am going to teach you. That is the same provision. We just need to see a different kind of calculation. So there is a note, some new notes, there's a new quotation for you. In order to succeed, your desire for success should be greater than your fear for failure. Okay. So what is relief concept? First of all, you should understand what is the relief concept. Before that, let me take your query section first, then we'll move on to our relief provision. So that is the last topic where we are going to discuss relief, and then we are moving for our numerical solution from study for interest provision, etc., etc., full question for salary. So let's see if there is any query, then we will solve it. Okay. What is asking? Alok is asking if question number 7 is for a specified employee, then Garima is a specified employee because 55 lakh per annum. What was the 7th question? Let me see once. Generally, okay, 6, and this is our 7. What you are asking, Alok, if question 7 is for a specified employee, then Garima is a specified employee because 50,000 per annum. But in this question, she is not a specified employee. If that salary is more than 50,000 per annum, then yes, she is going to be a specified employee. I guess this is what you're asking. In this case, because her salary is less than 50,000, so that's why she's not a specified employee. Okay. Provision is asking Bharanti Doshi, sir, provision of section 15 BAC. 15 BAC might be discussed in your initial topic, basic concept by your faculty. And it will come again. When the taxability provision will come, then this provision will come. There are a provision which says if you are going into section 15 BAC provision, then there are certain exemption you cannot claim. So what is exactly 15 BAC? That's the optional case for lower rate of tax. That is going to be discussed in detail when the taxability or how to calculate tax on your total income provision will be discussed in future. Okay. Mahima, we need Telegram group for discussion. Priyanka is giving the abbreviation for fail. Very good. Next is voucher means token, which cannot be transferred. It's kind of a, like you got the voucher for your shopping, etc. That is called a voucher. That means kind of a token against which you can purchase something, you can get something. That is called a voucher. Kavita, okay. Kavita again asking movable asset means movable asset, which is not immovable except house like furniture, TV, fridge, car, etc. Those are all movable asset. Why are you asking this kind of question? Please, it's a request. Please do not ask this kind of question that what is the meaning of movable asset. How I will explain you this thing. This is really difficult for me. Okay. Next is TV does not come in electronics. For that transfer of asset case, TV does not come in electronic. For electronic case, it's only computer or related item. Okay, next is Kavita is asking FMV and MRP में difference. कविता हम यहाँ ये डिस्कस नहीं कर सकते कि FMV और MRP में डिस्कस क्या होता है. एमआरपी प्रोडक्ट्स पे होती है. एफएमवी किसी भी चीज की मार्केट वैल्यू हो सकती है. प्लीज डू नॉट आस्क दिस काइंड ऑफ क्वेश्चन. दीज आर क्वेश्चन व्हिच आर नॉट रिलेटेड टू आवर टॉपिक. फाइन. Okay, so Priyanka is asking, sir, once repeat the professional tax paid by the employee. You can scroll back the video and you can understand the provision what we just discussed later. So there is no problem. So before, okay, so we are now on our relief provision. So now, first of all, you can see this provision is might be looking difficult to you because of these calculation what I have made for you. But there are two numerical solutions in these 2 pages. So the provision is for like half n pages. The other things are just the numerical solution over here. Let me describe you first what is the concept of relief and why it is here and why it is applicable in case of arrear of salary, advance salary, pension, gratuity, VRS, etc. So listen it carefully. What is the concept of relief? Why it came? For example, there is Mr. A. Now listen it very carefully. He is working in ABC Limited. Clear? From the year 2001. His salary was, for example, 50,000 per month. That means 6 lakh a year. In 2009, the salary become now 1 lakh rupees per month. All employees got Diwali bonus in this year, but Mr. A did not get any Diwali bonus in this year. So Mr. A asked his employer for that bonus of rupees, for example, 2 lakh, that it should also be paid to him, but ABC Limited denied. They say, no, your performance is not up to the level, so we are not going to pay you any bonus. Now what happened? This case has been transferred to the court. Mr. A went to the court that this employer is not giving me bonus, which I am entitled to have received. An employer said, no, we are not going to pay him any bonus. Now what happened? In the previous year, 2022-23, the judgment came and court say, yes, Mr. A is actually deserving candidate for that bonus in previous year 9-10. So now Mr. A should receive that bonus which belongs to, remember, which belongs to 2 lakh rupees bonus, which belongs to previous year 2009-10 bonus, which belongs to this year bonus. So court says Mr. A need to be given that bonus in this year. So now your employer is paying you bonus in 2022-23, but remember, this is not the bonus of this previous year. The bonus is related to the previous year, 2009-10. It happens in certain cases, not in case of bonus, in case of pay commission, in case of your increment in salary, which is actually stopped due to some reason, but after a certain point of time, it has been released to you in this year. The concept is what? The concept is saying, if any amount of salary has been received by you in this previous year, listen it carefully. If any amount of salary is received by you in this previous year, received in this year, but which belongs to some another year, which technically belongs to some other year salary, that is called arrear of salary, which is called arrear of salary. Understand? So if you are receiving any amount, so practically this 2 lakh rupees going to be taxable in previous year 22-23. For example, in previous year 22-23, Mr. A salary income except this bonus is, for example, 20 lakh rupees for this previous year, including bonus, commission, etc. for previous year 22-23. So now he need to pay tax on not only 20 lakh, but he need to pay tax on 22 lakh rupees, out of which 20 lakh belongs to this year and 2 lakh is kind of a arrear of salary which not belong to this year, which is an amount which he has received due to retrospective effect. So the court says that yes, Mr. A should receive that bonus amount, which is the bonus amount of 9-10. But obviously, he will practically is going to receive that amount in current year 22-23. This 2 lakh rupees cannot be received by him in 2009-10 because we do not have a time machine. So we can go in the 9-10 and receive that amount. No, in the 9-10, he has been paid tax on only 12 lakh rupees. 1 lakh rupees per month salary. So if we assume that 12 lakh rupees tax, then technically 12 lakh rupees tax has been paid in 9-10. Bonus was not included because that was debatable issue. So now this 2 lakh has been received in this year. So in previous year 22-23, he needs to pay tax on 22 lakh rupees, in which 2 lakh belongs to 9-10 years income. So now what will happen? There is a situation will arise. If we see closely in 2009-10, there was income on which tax has been given 12 lakh rupees because bonus was not there. Bonus was debatable. So practically now what is happening in previous year 22-23, your salary income 20 lakh rupees is going to be taxable, as well as the bonus which relates to this year but received to this year. ₹2 lakh is again going to be taxable in this year. So taxes has been paid practically like this. On 12 lakh, tax has been paid is 9-10. On 22 lakh rupees, taxes need to be paid in 22-23. Now the problem arises. Now assessee complain. Assessee say, no, this is injustice with me. This is very, very wrong. This should not be done. Assessee say, if this 2 lakh, technically, this 2 lakh is the income of this year. So if this 2 lakh has been received by me in this year and taxable in this year, that means if I have been paid tax on 14 lakh rupees in that year, and in this year only tax need to be paid on 20 lakh rupees, then my tax liability need to pay tax on this amount. So what is technically assessee saying? He is saying, if this 2 lakh has been taxed in 9-10, then my tax liability overall of 9-10 and 22-23 might be less. For example, we can say it like this, that he has paid tax on 12 lakh rupees, for example, just for example, 1,20,000. He had paid tax on 12 lakh rupees, just for example, 1,20,000 in previous year 2009. Relief has no solution provision. If you understand the concept, the provisions are normal. There is nothing new provision. So on 12 lakh, he paid 1,20,000. And on 22 lakh, he needs to pay in this year, for example, imagine 3 lakh rupees tax. So in 9-10, he paid 1,20,000. And this year, he need to pay tax on 22 lakh rupees, including the area, 3 lakh rupees. So total tax he needs to pay in this year plus this year is 4,20,000. So now assessee, what assessee is saying? Assessee is saying, no, this is increased tax liability. He say, if this 2 lakh has been taxable over here, like in this year, if I have paid tax on 14 lakh, and if in this year I am going to pay tax on 20 lakh, then my overall tax liability of both year will be less than 4,20,000. So what assessee is saying? Assessee is saying, because my 2 lakh belongs to 9-10, and due to the receiving year is 22-23, I need to pay more tax. So it should be taxable in the 9-10 only, not the year 22-23. Because it's not my mistake. I was always saying that it is my 2 lakh rupees income in 9-10. And because my employer did not pay me or due to any other reason, if I'm now able to pay tax on this 2 lakh in 22-23, that is increasing my liability. So please tax my 2 lakh rupees in the previous year 9-10. Now the problem is this, that we are in the year 22-23. Clear? And how we are able to tax that 2 lakh rupees in 9-10? Because tax has already been paid. We do not have a time machine that we can go to the time machine back and then we can change our assessment and pay tax accordingly. So department say, okay, you are right. Of course, assessee is right because his point of view is correct. He's saying, yes, you are right. So if this is right, if whatever you are saying is right, whatever you say, if 2 lakh has been taxed in the 9-10, then your tax liability will be different or less. So let's find out. If you are saying right, let's find out. And if actually you are paying higher tax, we will provide the relief. Relief is kind of a discount. So if you are paying tax higher due to the area of salary, what we received in this year, then department say, we will provide you a technically relief for any amount which you need to pay extra in this year. So we are not need to learn any new provision. We just need to do what? Now the concept say, let's work it over here like this. It says, let's see assessee right or not. So we need to just calculation is increasing, nothing new provision, no new provision is there. So department say, let's do one thing. For previous year 22-23, we need to calculate tax twice. First of all, we take our income 20 lakh salary and 2 lakh area of salary. So first of all, do one thing, find out tax on 22 lakh rupees including the area of salary, and find out 2009-10 salary tax without area. So what is actually happening? Let's find out the real tax like this. So tax including 3,20,000. And on this, we calculated the tax is assuming 320. Let me see the last slide. It was 120. So assume this is actually happening. This is the amount of tax technically SSC is going to pay, because in the last 2009-10, without area, he needs to pay this amount of tax. And in this year, including area, he needs to pay 320. So total he needs to pay 4,40,000 rupees. We are just assuming this figure, that tax on 22 lakh is about 3,20,000 and tax on 12 lakh is 1,20,000. This is actually happening. Now we see what assessee wants. This is actually what is happening. Now we will see what assessee wants. Assessee say, you should do this, tax only 20 lakh rupees in this year. We will say, okay, the tax is about 3 lakh. And for 9-10, tax my bonus amount in 9-10. We say, okay, we will do this for you. So we do not have time machine, but we can calculate if it would have been happened that tax is going to be taxable in that year only on the amount of bonus, then what will happen? So the tax on 14 lakh rupees as per the provision of that year might be 1,30,000. Suppose. So technically what assessee is saying, according to it, your tax liability will be 4,30,000. Now assessee said, look, due to what you are doing, I need to pay extra 10,000 rupees. So technically, the extra tax which need to be paid due to the taxability of 2 lakh rupees in this year, not in this year. Government say, yes, you are correct. We will provide you a benefit, and that is called relief. So what assessee wants, if it is correct, and if there is any increment in tax liability, that will be treated as relief. Relief will be provided out of the current year tax liability. So current year tax, including bonus is going to be taxable in current year. But because of taxability, how much extra tax need to be paid? That is 10,000. So we need to deduct it, and the tax liability will be 3,10,000. So that's how relief works. So there is no new provision. It just say, because area of salary is going to be taxable in this year, and assessee is saying due to this applicability, my tax liability is increased. So for that reason, I just need to know if that have been taxed in the year which it belongs, what will be my tax liability? So we find out 440 is what actually happening, and 430 if it would have been the way it should be. So difference will be a relief. For example, if it is reverse answer has been come, like this is 440 and for example, this is 450, then what will happen? There will be no relief. Government will not charge extra. There's a good provision that if after this calculation it has been found that you are technically paying less tax in this year, and if it have been taxable like this, your tax liability is higher. So if it is happening that this limit is lower and this is higher, then there will be no relief and you not need to pay any tax. In that case, your tax liability will remain 3,20,000. So I hope you must get what I am trying to say to you, that in case of arrear of salary, in case of advance salary, in case of pension, etc., in any cases, what is actually happening, we need to calculate it twice. The good thing is, the 9-10 tax will be given in question, excluding arrear and including arrear. You need to calculate only current year tax liability, because how would you know the provision for 9-10? What were the tax rate in 9-10? What were the tax provision in 9-10? How you would able to solve it? So if the relief question will come, then they will give you the tax including arrear and excluding arrear for the year 9-10 provision. So for the year 9-10, this provision must be in the question. So you need not to calculate the tax of 9-10 and you need not to worry about the tax liability of 9-10. We just need to do one thing, including arrear in 22-23 tax liability and excluding arrear 22-23 tax liability. I already solved a question for you, so you will be able to understand it more easily. Let's moving on to the provision. Everything has been written over here. So what exactly in relief is happening? Nothing is happening. Nothing new is there. It's just a simple thing. Because you receive some other year income in this year and it's going to be taxable in this year. So you just need to see that if it would have been taxable in that year only, so what will be the tax liability of both year? And we need to compare it with the actual what is happening. So if there is excess payment of tax, the balance will be your relief. Let's read the provision with the example and it will be really easy and very interesting also. So if an individual receive any portion of his salary in arrear or advance. In advance, how it works, I will also explain. After the arrear work, I will explain you how it will work in advance, how it work in gratuity, etc. also. So in advance or receive profit in lieu of salary, he can claim relief in terms of section 89, read with rule number 21A. When arrear advance salary receive, in this case, 2 years information or more than that will be provided in question. And we have to calculate previous year 22-23 tax liability after relief because arrear will be taxable in 22-23 previous year. I have used previous year version over here, not assessment year. So year 1. So we are just giving the name. You can say year X, year Y, year 1, year 2, year A, year B, anything. So we are just saying year 1, we are assuming previous year in which arrear advance actually received. We will call year 1. Year 1 hour is a current previous year in which the amount is actually received. Clear? And what is year 2? Year 1 is the amount received, that is our normal previous year. Year 2 will be that year for which year it technically belongs. So year 1 and year 2 concept is clear. So year 1 we will call the year in which we received it. You can say it year X, year Y, whatever, but in this question for our provision, I took it like a year 1. So when I'll say year 1, that means current previous year. When I'll say year 2, that means that year to which that income belongs. For example, if previous year 2-3 area received in previous year 22-23, then year 1 will be 22-23 and year 2 will be 2002 and 2003. Clear? Now step 1 is say what? We just not use these are steps just to make you understand, but the provision is very simple. Firstly, find out tax liability as follow. What we need to do? Once we add the arrear in current year and calculate tax and calculate tax of that year to which it belongs without including the arrear. Like in the current example we discussed, the arrear of bonus 2 lakh. The calculate tax on 22 lakh. And in that year income only on rupees 12 lakh. So tax on year 1 income including such area. And tax on year 2 income excluding such area. Of course, this is the first case we need to solve. First off, including area in current year and excluding it from last year. Step 2, just do the reverse thing. Tax on year 1 income excluding the area. Now calculate tax on only 20 lakh rupees. And in that year income, you need to tax the income, including the area. That means on 14 lakh rupees. The year which it belongs, the tax will be given in question. We just need to calculate this tax in our question with the provision of previous year 22-23, assessment year 23-24. These year taxes will be given, including area and excluding area, both ways. So just you need to calculate 1 year. Step 1 says tax on year 1 income including area and then tax on year 2 income excluding. And reverse, year 1 income excluding, year 2 income including. Now we need to compare the tax. If total of tax 1, this is higher than total of tax 2, then there will be relief. And if there is reverse, then there will be no relief. So if step 1 tax is more than step 2 tax, the difference is relief. And if it's vice versa, then there will be no relief. How relief will be provided? The previous year 22-23 tax liability minus relief. So this is the way we need to provide the relief provision. So now we are going on a break, and after break, I will solve the numerical question related to relief, which has been given in the notes. So let's meet after 10 minutes of the break. I hope you must have your tea, coffee, etc. as I had. So we were discussing the provision of relief. Let's move on the provision. So technically, I just explain it to you. Relief is, there is no new provision in the relief concept. This is just a calculation. And the calculation says that what income belongs to some preceding year is going to be taxable in current year. So what we need to do in step number 1, we need to calculate tax on current year income, including that income, and need to calculate tax on that year income without including that area or advance. And then we need to reverse the process. Let's move on to the example. So that will make you more comfortable with the provision. For example, previous year 22-23 salary is 6,17,000 and 20,000 area of previous year 92-93. Okay. Salary of 92-93 was 50,000 only, and deposit in 92-93 1,500, and previous year 22-23 10,000 in PPF. Calculate relief under section 89. So what do we need to do? We need to calculate step number 1, which says current year salary 617, include area 20,000. Now it comes to 6,37,000. This is my gross salary, less deduction. Now GTI is 5,87,000. If you contribute in PPF, Public Provident Fund, you get a deduction of under section 80C, that is 10,000. So now your taxable income is 5,77,000. So we have to calculate tax on income of 5,77,000 as per normal provision of rate of taxes, our slab rate. So that will come 27,900. Then we will applicable surcharge, that is not applicable because surcharge is applicable if your income is exceeding 50 lakh rupees, which is not in this case. We will applicable our cess. So this will be tax liability 29016. So our tax liability, including the area of current year, is 29016. Now what we need to do? We need to calculate tax on that year income for which that area belongs. That is 92-93. And the income is given 50,000. We will not include area in this year income, of course, because area has been including in previous year 22-23. So step number 1 says include area in current year and calculate tax on that year income without area. So this income tax will be given in question. Income is 50,000. I have solved this like this, but do not worry. In the examination, the examiner will give that salary is 50,000 without including area. The tax is 1,700 rupees. These figures we do not need to calculate. I just calculated it for you, but you need not to calculate because in examination it will be given 50,000 salary or other total income of 92-93, and the tax on that is 1,700. So technically, if we include area in 22-23 and does not include area in 92-93, then our tax will be this 29,016 and 1,700. So total tax as per step 1 will be 30,716. The total of 29016 plus 1,700. Okay. Now I reverse the process. Now for previous year 22-23, I would not include area, but for 92-93, 20,000 will be included for calculating tax. So if area not including, then my tax bill income is 5,57,000 for this year, and tax will be 24,856. Clear? And after including the area in 92-93, the tax is assumed 4,800. So this tax will also be given in examination that in previous year 92-93, without area tax is 1,700 and with area tax is 4,800. So total tax liability as per step number 2, when we include area in the preceding year, we can say this is the tax what actually is happening. And this is the tax what actually assessee was asking. So you can see that if the area is going to be taxed in the year 90 to 93, what assessee was saying. So there is a 1060 higher tax, what we are paying as per the department provision. So now who is correct, assessee or department? The assessee is correct, because due to this provision, he needs to pay extra 1060 in current year. So now the relief is 1060. How we can take it? We will reduce the relief out of the current year tax, which is 29010 or 29016 less 1060, sorry. And the balance will be your tax liability, which is, let me see. So our tax was 29016 minus 1060, 27956. That is our current tax liability. Understood? So in the case of area, again, I am saying the same thing. There is no new provision. The tax calculation, the other provisions are exactly the same as it's normal. You just need to do one thing. Area including current year, excluding that year, and then reverse it, excluding current year, including that year. Calculate aggregate tax by both the ways. And if step 1 tax is higher than step 2, then the balance is relief is going to be deducted from current year tax liability. If it is 30,716 and this is more than 30,716, then there is no relief. So the tax liability will remain 29016 in that case. Clear? Now, how it also applicable in case of advanced salary? If you think advanced salary also has the same concept, like for assessment year 23-24, previous year, that means 22-23, assessee basic salary is suppose 6 lakh. And advanced salary for next year, 4 months, has been given by employer 2 lakh rupees. So if this is your gross salary, that means you need to pay 8 lakh rupees less standard deduction for say 50,000. So if your taxable income is 7,50,000, so you pay tax on this. In advanced salary cases, how the relief concept applicable, I am just explaining it to you. In area, what happens? Preceding year salary received in this year. So that year tax liability and this year tax liability need to be compared. In advanced salary, automatically it is happening because what you are doing, you are taxing technically previous year 20 to 23-24 salary in current year. So now what will happen? Assessee will say that if this 2 lakh has been taxed in this year, now in this year basic salary, suppose 4,50,000, and this advanced salary which should be in this year salary already been taxed in this year. So assessee say the same thing, that if this 2 lakh has been taxed in this year, that means if I pay tax on 650 this year and in this year on 6 lakh, then my tax liability will be less. So the same concept applicable. So in this example, what we should do? Again, step 1. Step 1, that what is exactly is happening, we need to do that. Step 1 say, calculate tax on including advanced salary in previous year 20 to 23. That means on 750. And step 2 say, calculate tax on this minus deduction 50,000. That means 350. Calculate tax on 350 income. Total tax 1. Then reverse it. Now we will calculate tax liability on this year without including advanced salary. That will come 5,50,000. And include this 2 lakh rupees in this. So this will again 550. And now calculate taxable tax liability 2. If 1 is greater than 2, then the balance will be relieved. If it's not, then it will not be relieved. For example, for the purpose of examination, area of salary might be going to be framed for your exam, not advanced salary. Because in case of advanced salary, we need to know the rate of tax of this year also. We need to know the provision of future also. which is going to be declared later. So we have the rates of preceding years already, so that can be solved. But for the future year rates yet to be declared, so how the rate, the amount of tax will be given in question for this year calculation. So generally in the examination, always area of salary provision has been framed. Okay. But the concept is same. There is no difference. Exactly same provision is there. Next, relief in case of gratuity. There is a gratuity case also relief provision applicable. Again, there is a no new concept. There's again a new calculation. That's it what we need to do. Otherwise, there is no new concept is there again for gratuity also. What is the new concept? It says we all know why we receive gratuity. We receive gratuity for a number of years we have worked with the employer. That's why. For example, if you have worked for your employer for 15 years, then he's going to pay you a gratuity amount. It's a kind of a thank you for you. For example, you received, for example, 2 lakh rupees in response to a gratuity. So you receiving 2 lakh rupees in previous year, in the year of retirement, 2 lakh rupees as a gratuity. But is this 2 lakh rupees really belongs to the previous year only? Is it a thank you which is actually your employer is paying for your previous year work, or you're for last 10 or 15 years of job? Of course, it technically received for your last 15 years loyalty, for your 10 years loyalty, for your 12 years loyalty. So why it's going to be taxable only in the previous year? Assassi say this is wrong, because this is my loyalty payment for my last 15 years, etc. So why you are going to tax it only in the current previous year? If it has been taxed in the last years proportionately, then my tax liability will be less. Now it's very difficult to tax in this amount in last 15 years proportionately, because the calculation will be very difficult, very, very difficult. So department says, okay, we will taxable it this amount in your last year also. We will see that if it is taxed full value in the current year, and if it is taxed in last years proportionately. So if tax is lower in that case, then you will get the relief as we will get in case of arrear of salary. So this is a provision. Relief in case of gratuity. If any employee received gratuity in respect of his service, he can claim relief as follows. Step 1, if he renders services less than 5 years, there will be no relief provision. If you receive gratuity less than 5 years of services, then there will be no technically relief. And if case number 2, if he renders services for 5 years or more, but less than 15 years, then taxable gratuity will be included in 2 preceding previous year income to calculate average rate of tax as follows. What we need to do? We need to taxable the gratuity value full in previous year 20 to 23, 100%. And we need to say, if it is going to be taxed 50% in previous year 21-22 and 50% in 20-21. Then we need to see the tax. So if we include, technically we need to include in previous year 20 to 23 full value and need to calculate the tax. And we need to now check also again this. For example, if 1 lakh is going to be included in previous year 20 to 23 in your salary income, then we need to see if it has been taxed 50,000 in previous year 21-22 and 50,000 in 20-21. Then average tax is higher than that or not. This is a solved example, so you will be able to understand it more. If you work for more than 15 years, then it will be divided into 3 years. In previous year 20 to 23 full value and 1/3 in previous year 21-22, 1/3 in 20-21 and 1/3 is 19-20. We need to calculate average rate of tax for each year as follows. Total tax on that year, taxable gratuity for respective year, total income of that year. How it will be done? Let me show you with an example. It's again mathematics. There is nothing new concept. For example, in previous year 22-23, you receive gratuity for 12 years of service. After 12 years of service, and that is 6 lakh rupees gratuity received. Now what we need to do? We need to find the exempted gratuity as per the gratuity provision, case number ABC. And after applying the respective case, for example, taxable gratuity assume 2 lakh rupees. Now, how we need to solve? It's like this. Need to find out previous year 22-23 income. For example, salary except gratuity is 10 lakh. Taxable gratuity is 2 lakh. Or take this like salary is 10 lakh 50,000. 10 lakh 50,000 is salary. Gratuity taxable value as per the provision 2 lakh. Gross salary is 1250. And deduction, standard deduction 50,000. Assume this is our total income. No other deductions are there. That is 12 lakh rupees. What we need to do, we need to calculate tax on with the help of slab rate on this 12 lakh rupees. Suppose it will be 1,12,500 plus 60,000. Approximate with education cess. Approximate, I am taking it 1,80,000. We just need to find the normal tax as per the normal provision of rate of tax. So this is a tax upon 12 lakh. We need to see what is the tax is paid by average rate of tax on this gratuity value. The proportionate tax on this gratuity. How we'll find out? With the help of mathematics, proportionately 1,80,000 has been paid on 12 lakh. So what will be the tax on taxable gratuity? Technically, we are bearing in this year upon 2 lakh. So how much it will be? Let's see. 180 tax has been paid upon 12 lakh rupees income. So what will be taxable tax liability on? That will be gratuity tax liability 30,000. Average tax on gratuity. So technically, we taxed 2 lakh rupees in previous year 22-23, and the tax average tax we paid on this gratuity on this value is 30,000. Now we need to find that if this gratuity is taxable in two previous year equally, then what is the average tax on that gratuity? That is previous year 21-22 and 22-23. Okay. Now, these 2 years salary income, etc. will be given in question. For example, salary of this year was 850. So we need to tax the gratuity taxable 50% over here. That means 2 lakh, 50% is 1 lakh. So total income, standard deduction is 50,000. So technically total income is 9 lakh rupees. For this year, for example, it's 550. Then 1 lakh gratuity. After standard deduction, 50,000. Now this is 6 lakh rupees total income. Again, because these are preceding previous year, so we do not know the real provision slab rate might be different from this year. So tax will be given in question. You need to calculate over here till over here provision. What is the taxable income? But tax liability will be given in question. For example, tax on 9 lakh has been given in this provision 80,000. And tax on 6 lakh rupees income has been given 60,000. So now we need to find the average tax has been paid in these 2 years separately. So 80,000 tax paid when TI was 9 lakh. So how much tax we paid on 1 lakh rupees gratuity? Let's see. 80,000 has been paid on 9 lakh rupees income. So what is tax technically we are paying on 1 lakh rupees? That is 8,888. These are tax including education cess, etc. Fine. Now again, the 60,000 has been paid on 6 lakh. So on 1 lakh, how much is paid? That is 6,000. So total tax, if we distribute this gratuity in last two previous year would have been 14,888. But as we including the full value in this year, then the average rate of tax which is going to be paid on gratuity is 30,000. That means we will get relief. 30,000 is higher. If we distribute in the last two previous year, then the tax liability will be only 14,888. So technically, we are paying higher 15,112 relief you can have. And relief will always be provided out of the current year tax liability. So current year tax liability was 1,80,000. So you can deduct the relief of this much amount from that tax liability, and this will be your new tax liability. If you have worked for more than 15 years, then this 2 lakh will be divided into 3 years, 1/3, 1/3, 1/3. Clear? So after that, again, we will find 3 taxes and aggregate of taxes. If less than the current year tax, you will get the relief. So you can see there's just a new concept of calculation. There is no new provision we are discussing in case of relief. So might be when we are discussing about the provision over here, you are finding it difficult, but after the example, you must be feeling that it's not difficult. Again, I have solved a numerical for you with this. Mr. Kishore receiving gratuity of 445417 previous year 22-23 after 20 years of service. Exempted is 436417. That means total taxable is only 9,000. Previous year 22-23 salary detail, interest detail has been given. And last 3 years, salary and interest and ATC deduction details have been given. So you can see this is the taxable values coming. First of all, we have taxed the whole 9,000 gratuity in previous year, and the tax on this is coming 1683 as per normal provision. Then because job is more than 15 years, so 1/3, 1/3, 1/3 is to be taxable in 3 preceding previous year equally. And after including that, the tax liability will be given in question. This will be given in question for preceding years. And now we need to find that if 3,000 taxable separately, then what will be the taxes? So in this year, if 3,000 taxable, the tax and gratuity average rate is 162. If this is taxable over here, then the tax on this will be 124 rupees. And over here is 431 rupees. So total, we just need to pay 431 rupees. We just need to pay 431 rupees, 145 to 144 and 162. And due to we are taxable the whole amount 9,000 in current year, we need to pay 1683 rupees. So excess is 1251. That will be treated as your relief. That will be out of your current year tax liability. If there is compensation on termination, etc., then the same provision will be applicable. So that was the case of relief provision we just discussed. Now moving on to some numerical, I need to solve some numerical to you that is full numerical for you. Let's see, I have also already made a chart also, the car provision diagram for you. I have uploaded a chart, but I feel that chart I have uploaded that is in a format base for car perquisite. And if a car facility perquisite will be on a single page, that will be really easy for you to understand that more clearly. So I yesterday at 11:20 p.m. 4th November made a diagram for you, and I'll upload this diagram. I'll make a PDF of it and I'll upload it on the portal. So you can actually understand the whole car perquisite with the help of this diagram. And I suggest you just see this diagram and make an own diagram yourself by writing. So when we write something, we automatically learn more than 10 times what we see. So just copy this diagram on a single page. If possible, copy this diagram on a single page. And I promise, if you copy that, you will actually going to learn all the provision of car facility at once only. So I'll upload this diagram and please copy it by your own. Okay. Next, some questions for you. Okay, let me see what question we need to solve. Illustration number 20 on page number 485. Before starting this question, let me see if there's any query, so I'll solve it. Okay. Okay, Kavita is saying, sir, your teaching speed is little fast. Yes, Kavita, because I need to complete all the provision in our fourth session, and the salary is a huge topic. So if you feel that my speed is little fast, so you can slow it down with the help of your YouTube video, and you can do one thing. You can read. You can actually reverse the video and watch it once or twice, so you'll be able to understand what I'm actually trying to convey to you. Okay. Next is. Okay, this is a question from your study, that is illustration number 20 on page number 4.85. We will solve it one by one, the whole provision. Mr. X retired from the service of Messrs. Y Limited on 31st March 2023, 31st January, after completing service of 30 years and 1 month. He had joined the company on 1/1/1993 at the age of 30 years and received the following on his retirement. Gratuity 6 lakh. He was covered on the Payment of Gratuity Act. Leave encashment 330 for 330 days leave balance in his account. He was credited 30 days leave for each complete year of service. As per the scheme offered, a car which was purchased on 30th January 2020 by the company for 5 lakh, an amount of 3 lakh as pension 2/3. Company present him a gift voucher 6,000. His colleagues also gifted him a television. Following are the other particulars. Basic salary 20,000 and 50% DNS allowance per month from April to January 2023. Received pension of 5,000 per month from the period 1st February 23 to 31st March 23. Now you need to calculate the salary, assuming that provision of 115 BAC not applicable. When 115 BAC applicable, certain amount of exemption cannot be claimed, etc. So we are solving the provision assuming that 115 BAC not applicable. So initially, when you solve any numerical under income tax, you need to use a heading, that is computation of salary income or computation of gross total income, whatever has been asked in question. So in question doesn't been asked, compute his gross total income. So if they ask compute the gross total income, we will start our question with the help of computation of gross total income of Mr. X for assessment year 23-24. First of all, as per the ideal format, I suggest first of all you should find out the basic salary, dearness allowance, allowances portion. Then we'll move on to gratuity, etc. provision one by one. So basic thing is basic salary is 20,000 per month because he retired on 1st of January. So basic salary of 10 months will be taken from April to, of course, December. That will be 2 lakh rupees. Then dearness allowance, that say 50% of basic salary, that will be 1 lakh. And now we have not been given that DA as per terms of employment or non-terms of employment. I have discussed a provision regarding this, that if something is not given in question, if anything is not given in question about the DA, whether it is as per terms or non-terms, then what we will assume it? So answer me, what DA we will assume this, as per terms of employment or as per non-terms of employment? This is very important. You should know the DA is as per term or not. I am waiting for your answer. Let's see who's going to answer first. What we will assume this DA, as terms of employment or non-terms of employment? Let's see who's going to answer me first. Okay, Danish is saying non-terms, very good. Gurleen is saying non-terms, well done, well done. Exactly. So if it is not given in question, we will consider it as non-terms. Okay. So we have now basic salary, we have now DNS allowance. Now we are moving on to the other provision is given in question. So this is now gratuity 6 lakh. He was covered under the Payment of Gratuity Act. So if gratuity has been given, which of rupees 6 lakh, and it says he was covered under the Gratuity Act. So how we will solve it? We know the provision regarding it. It's a B case because he's covered under Payment of Gratuity Act. So we will solve it by the help of B case. B case say amount received, that is 6 lakh rupees. Then fixed value is 20 lakh rupees. Then third point, it said 15/26 into monthly salary. Monthly salary means in B case, that is basic plus all kind of dearness allowance. So that will be 30,000, whether it's term or non-term. And it says year of service. So how much year of service he served? That is 30 year and 1 month. If it is more than 6 months, we will convert into a year. So 30 year and 1 month, that means that will be 30 over here. We will solve this. And if you will solve this, you will get the amount of rupees 519,231. Lowest will be exempted and received minus exempted. Taxable value will be 80,769. Clear? The taxable value will be 80,769, like this. You can see gratuity 80,769. In a study, everything has been explained. There are separate note also. You can refer the notes also. So we have solved the gratuity. Now moving on to the leave encashment. Leave encashment of 3,30,000 for 330 days leave balance in his account. He was credited with 30 days leave for each completed year of service. How we will solve it? Again, for leave encashment, amount received is the first value we need to take. Then second is fixed value 3 lakh. Third is 10 into AMS. Now 10 in AMS is gratuity C case. That is basic salary plus DA terms plus percentage commission. So now this DA will not be considered for the purpose of this value. So 20,000 of basic salary will be there, and this third limit will be now 2 lakh rupees. Now fourth say leave earn minus leave avail into AMS upon 30. So leave earn, that means which has been allotted by your employer, which cannot exceed 30. So 30 days leave already assigned to you every year. So 30 or government value is also 30. So whichever is lower, higher, that is lower is again 30. And number of year you serve, that was, we serve for, I guess, 30 year and 1 month. Okay. So 30 days of leave every year for 30 years. That means this will come 900. And leave avail is not given in question, because 3,30,000 for days leave balance, that means unavailed is given. So if unavailed is given, then we need to find the leave availed. And I've told you the provision, the concept, total leave, that is 900 minus leave unavailed, that is 330. So balance will be your technically leave avail, that will be 570. So 900 minus 570 into 20,000 upon 30. We need to solve it, and the solution will say that it will come 2,20,000. If we solve it, it will be the fourth point will be now 2,20,000. Lowest out of these four will be 330, 3 lakh, 2 lakh, and 220. Lowest will be 2 lakh. This is going to be exempted, and balance 1,30,000 is going to be taxable. You can see this leave encashment 1,30,000 is going to be taxable. So after leave encashment, now we are moving on to the third point. The third point says, as per the scheme of the company, he was offered with a car which was purchased on 30th January 2020 by the company for 5 lakh. Company has recovered 2 lakh rupees from him for the car. company depreciate the vehicle as the rate of 15%, this does not have any meaning. For the purpose of transfer of asset, we just saw that 20% with reducing balance method is going to be taxable, is going to be deducted, and the value which will be received after charging of 20% of WDV method will be treated as the FMV for each completed year of service. So technically, there is 2 years. The company purchased the car on 30 January 2020 and car was purchased. The company has recovered this one amount, and after total year of use, that car, 30 January 23, company sold it to the employee on 30 January 23. So technically, till 30 January 2020, and it has been transferred to the employee on 31st January 23. That means after 3 years of using the car. So we will charge depreciation for 3 years on the value of car as per WDV method, which was 5 lakh rupees purchasing cost. 20% is 1 lakh reduced. Then 4 lakh rupees has been balanced. Then again 20% of this, 80,000 will be there. Then 3 lakh 20,000 is there. And then 20% of this is 64,000. And whatever balance is there, 2 lakh will be reduced from it. The balance will be 2,50,000. So 2,50,000 is the FMV of that car, which has been provided to the employee for rupees 2 lakhs. So that 50,000 will be your taxable value of perquisite as follows. You can see that in the solution also. We can see the solution of this. This is the 5 lakh rupees, 20% DAP for 3 years, reducing balance method. The balance value is 256. And out of 256, 2 lakh will be reduced. The value of perk will be 56,000. So we have discussed the gratuity provision, the transfer of car provision, the leave encashment provision, and then moving on to pension provision. An amount of 3 lakh as commuted pension for 2/3 of his pension commission we received. So we need to find out the first of all whole value of pension. So if 2/3 is equivalent to 3 lakh, that means the total value of pension will be 4,50,000. And because he also received the gratuity, so exemption amount will be 1/3. That means 1,50,000 will be the exemption. Taxable formula, universal income tax, that is received minus exempted. Received was 3 lakhs. So 3 lakh was received amount and 150 has been exempted as per the provision. So balance 1,50,000 is going to be taxable as your pension. You can see the working note, of course, it has been written over there again. Next, a voucher provision. We just discussed today, the voucher provision says up to 5,000 rupees voucher as a gift is exempted. Balance is going to be taxable. So out of this 6,000, we can deduct 5,000 and 1,000 is going to be taxable. Another view is this, full 6,000 can be taxable. For the purpose of examination, you can recommend the view that is only 1,000 is going to be taxable. His colleagues also give him a television worth rupees 50,000 from their own contribution. Now understand, the gift has been given by the colleagues, not the employer. Under salary head, we can only include those payments which have been received from employer and not his colleague, friends, etc. So this has no treatment under the head salary. This is going to be treated under income from other source. And even in income from other source, television is not covered under the definition of assets. So this has no treatment in salary as well as income from other source. For time being, because you have not studied the income from other source provision, for time being, you can understand that only salary will be no applicability for this provision because it has not been provided from employer. So we have discussed all provision except this one. There's a pension of 5,000 per month also received by him from 1st February. So the pension which was taxable of 150 was commuted and uncommuted pension of 2 months from February and March is going to be taxable again. That is 10,000. So we discussed the gift voucher provision, of course. Gift voucher, it is over here 6,000. But in note, it has been written, then you can taxable 1,000 only also. So I recommend the view of 1,000 also. Transfer of car, gratuity, leave encashment, uncommute pension for 2 months. Commute is 1,50,000. That will be your gross salary, of course. And that out of that gross salary, you reduce the deduction 50,000 or gross salary, whichever is lower, that is 50,000. And the balance will be your taxable income. This is the voucher provision. The voucher provision say that you can taxable only 1,000 also instead of 6,000. So that's the whole question we discussed. Okay, Dhyanesh is asking, sir, sequence is mandatory or not as per the study material? The sequence is not mandatory, but it will help you if you will follow that. First of all, just try to take all the basic salary, dearness allowances, all allowance, etc. And then perquisite and then compensation, etc. That will help you in solving the question. Okay, I would like to solve one more question. Page number 4.89. This is a question. This is a one by one taxable question. Of course, like domestic service was provided at the residence of Bala, his employee. Salary of domestic service is 1,500 per month. The servant was engaged by him and the salary is reimbursed by the company. So servant appointed by employee and payment made by employer. What will be happened? It's going to be taxable for all employee. We discussed it today. So it's very simple provisions. You can read it by yourself. Next is the interest provision perquisite I need to discuss with you. And that is in 6 point of this part. This is very important. I'll give you a trick so that you can solve it very easily. That housing loan, the interest perk we discussed was, it says that if you have received any concessional or interest-free loan from your employer, then the amount of perk will be the concessional interest you have received. And it's going to be calculated on the balance at the end of each month outstanding. So it's a calculation provision, and here's a question to make you understand this provision very easily. Housing loan 6% per annum, amount outstanding on 1st April 2022 is 6 lakh rupees. And Shri Bala pays 12,000 per month toward principal on 5th of each month. SBI rate has been given in question is 10%. So 10% was the SBI rate. You are receiving it 6% per annum. So benefit is for 4%. 4% is need to be taxable on the outstanding amount of rupees at the end of every month. So now if you understand, on 1st April, that balance was 6 lakh. And he pays 12,000 per month towards the principal amount on 5th of each month. So in April opening, that was 6 lakh. So he must have been paid 12,000 on 5th of April. So at the end of the month, the balance will be 5,88,000 for April month. Again for May month, 588 minus 12,000. That is 5,76,000. So on, you need to calculate the balance of 12 months each. Let me show you the solution, and then I'll tell you the trick. This is the way it needs to be done. April closing balance is 588, then 576. Every month you need to reduce 12,000. 564, 552, 540, 528, etc., 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 so on, so on, so on. And you need to calculate tax, need to calculate the interest, that is your taxability of perquisite. That is 1% per month, like this. How we are calculating it? Like this. 5,88,000 into 1%, sorry, 4% for 1 month. That will come 1960. 5,88,000 into 4% into 1 month, because this balance is due only for 1 month. Then the balance change, then only for on this value 4% same into 1 month. So you need to calculate at least 12 times. This provision need to be calculated for 12 times. You need to calculate the perk value for 12 times. The total will be 20880. Now I have a simple way to solve it. You do not need to calculate for each month taxability value. Here's a shortcut also. Calculate the closing balance at the end of every month like this. You not need to solve this provision. I have a shortcut, which is very short and very interesting. So 588, you need to find out these values. You need to deduct 12,000 every year. So you will have, it's a mathematical trick, nothing special. So you will have these balances with yourself. Now you need to do only this. The total of this need to be calculated. Now find out total of all these 12 values. This column total. This column total will be 62. The total will be 62, 64, 2,64,000. That's the total outstanding balance of each year total of this column. Now just apply the rate on this value, 4% into 1 by 12. That will come 20880. Same, done. So if you will calculate interest for 12 times, it might be possible that if one interest calculation is going wrong, your whole answer will be wrong. And you need to calculate 12 times. The more calculation, the probability of more mistakes will be higher. So it's a shortcut. You need to calculate the balance at the end of each month, find the aggregate of it, and apply the rate on this value. So your answer will be automatically the same. Okay, you can solve it like this. So I told you that when I was teaching you these provisions of outstanding balance, you might be feeling it's so difficult, but when we solve the numerical provisions question, then automatically they feel very easy. So that's the way you need to calculate this. This question already been discussed with you. The sweat equity share question, illustration number 22 on page number 4.94. I have told you that in question, FMV will be given. You need not to find out the FMV generally. So it has been given that 1,000 sweat equity share from employer has been given to you for 200 rupees per share. The market value is given in question is 300 rupees per share. So how much is going to be taxable? Market value minus the amount received from employer, 100 rupees per month is going to be taxable. For 1,000 share, total PUG value will be 1 lakh rupees. It's as simple as that. This question also solved. Okay. So we have done almost all the questions. There's a relief question also in study. Page number 4.100. You can solve it yourself as per the provision I taught you today. Before ending, a last provision that might not be that important for the examination, but because I have been assigned a task to complete the course, so I need to tell you the provision. There is one provision that is regarding the superannuation fund, what we left. And I have said to you that we will discuss it later. So that's the time we have. So I guess within 5 or 10 minutes, we will complete this topic and our salary will be going to be end. Page number 4.51. So I covered each and everything. I didn't left even a single topic for you. So I hope you are going to read it very carefully. You will going to read very sincerely, and I guess you will all clear your examination with your dedication and sincerity. So page number 4.51, there was a provision regarding the superannuation fund, which is might be not that important for the examination, but still let's discuss. And there's a solved numerical also. This was the provision. Aggregate or the aggregation of amounts of any contribution made to the account of the sussee by employer in a recognized provident fund. The provision says the amount or aggregate of amount of any contribution made in a recognized provident fund, in a NPS, in a superannuation fund, to the extent it exceeds rupees 5,50,000. And in that case, we need to find out the annual accretion value need to be taxable. We need to find how this annual accretion value need to be calculated and taxable. So here is the provision. Quite complicated, but it will be. Okay, fine. The provisions say, in other words, interest, the annual accretion we are going to taxable And it says this is the way we need to tax it. In other words, interest, dividend, or any other amount of similar nature on the amount which is included in the total income under section 17 to 7 would also be treated as a perquisite. The CBDT wide rule number 3 be notified the following manner to compute the annual accretion by way of interest, dividend, or any other amount of similar nature during the previous year. The formula to find out the taxable value of perquisite is this. TP is equal to PC upon 2 multiplied by R plus PC1 plus TP1 and that multiplied by R. What is these things are? TP is taxable value of perquisite, of course. PC, amount or aggregate of amount of employer contribution. If your employer contribute in your NPS or RPF or superannuation fund in excess of 7,50,000, then that excess will be called as your PC. So PC is your technically a contribution which is in excess of 7,50,000 rupees. We need to see how much contribution have been made by the employer for your recognized provident fund, your NPS scheme, or your superannuation fund. If we contribute 8 lakh, then 50,000 will be your PC. If we contribute 7 lakh, then PC will be 0. PC1. PC1 says that what is the employer contribution? Same thing, exceeding 7,50,000, but that is in preceding year. This is the contribution for current year. PC is contribution for current year. And PC1 is that is other than the current previous year, the last year contribution. For example, if we are in 22-23 previous year, then PC say 22-23 contribution. And PC1 says 21-22 contribution. That will be placed in PC1. What is TPI? TPI says the last year perquisite value. Like TP, what we are finding the taxable perquisite value for current year, and TP1 is the same thing of the last preceding year. The last year perquisite value as per this formula, what have been calculated by you is going to be placed as per TP1. So now we know what is PC. PC is current year contribution exceeding 7.5 lakh divided by 2. We know what is PC1. PC1 is last year contribution exceeding 7.5 lakh. What is TP1? TP1 is the last year perk value. Now we left only what is the meaning of R. R is I upon F average. R is I upon F average. Now what is I? I says the amount or aggregate amount of income accrued during the current previous year. The income accrued during the current previous year in the RPF or NPS or recognized superannuation fund. So we need to find out what is this value. This value will be find out like this. So I says that is total contribution in that fund by employee plus employer less, sorry, not total contribution, that is total balance. Total balance on 31st March 23, the previous year we are talking. And out of that balance, you need to deduct this. Current year employee contribution, current year employer contribution, plus opening balance on 1/4/22 of that provident fund. So out of the closing balance, if we deduct the employee contribution, employer contribution of current year and the opening of this balance of this current year, that will be called I. So I will be the income of that provident fund. So opening balance is assuming 10 lakh rupees of that fund. Contribution is 2 lakh by employer, 2 lakh by employee. That is 14 lakh. And the closing balance is given 15 lakh. So 1 lakh is with what is the 1 lakh? 1 lakh is technically the interest value. So I resemble the interest of that provident fund for the current year. That is income. So its opening balance, closing balances question is given 15 lakh. Employee contribution is 2 lakh. Current year employer contribution is 2 lakh. And 10 lakh is opening balance of that fund. This is the closing balance on 31st March 23. This is 1st April 22 balance. Then 1 lakh will be called I. Full information will be given in question. You just need to apply the formula. As I always say, in numerical, you need to remember the whole provision. Balance, all information will be given in question. Now, what is F average? F average says that the balance of closing balance 31st March 23 less opening balance 1st April 23. So the balance created in the first day of current previous year plus the contribution and divided by 2. The opening balance, just wait. We need to take the balance of first day and the balance of last day of the fund value. We need to take the opening balance plus closing balance of fund divided by 2. That will be called F average. That is fund average balance. So I resemble technically income or interest. F average means fund average value. So opening plus closing divided by 2. With the help of this formula, we can find the solution. There is a mistake in study material also in the solution, so do not get confused. This is the numerical that is being solved with the help of this provision. Let's see how it is going to be solved. We need to read the provision, then we will wind up the class because this is the last provision we are discussing. Mr. X is appointed as a CFO of ABC Limited in Mumbai from 1/9/2020. Okay, Neha is asking uncommitted pension, not understand why take 5,000 into 2. Uncommitted pension means, Neha, that is per month pension. So per month, he has been allowed 5,000 rupees per month pension from 1st February. So 5,000 and 5,000 for March. 5,000 for February, 5,000 for March. That means 10,000 will be his uncommitted pension, right? So X is appointed as CFO of ABC Limited in Mumbai from 1/9/2020. His basic salary was 6 lakh. He spent 8% as DA. He contributed 10% of his pay and DA toward his recognized provident fund. Of the company, contribute the same. So 10% has been paid by employee, 10% has been paid by the employer. The accumulated balance in recognized provident fund, 3 years accumulated balance has been given in question to find that F average, etc. Like on 1st April 2021, the average was this, the balance was this. 31st March 22, it was this, and 31st March 23, it was this. You need to calculate 2 years perquisite value. You need to find out the 2 years perquisite value with the help of this formula. So we need to find the 2-year perk value, that is PC for 2 years. So first of all, we are finding the value for assessment year 22-23. That means previous year 21-22. Slightly complicated, might be not going to be asked in your examination because the calculation is very complicated. But might be coming, can be come into examination. So we cannot say that you should skip this provision also. We should know everything. So this is the formula we need to solve. That is PC/2 into R plus PC1 plus PP1 into R. So PC, as I have told you, that is the contribution in excess of 7.5 lakh for the current year. So in the question it has been given that contribution is 6 lakh rupees. Per month salary is 6 lakh. That means, and 8% is DA, that is 48,000. So 6 lakh is your basic salary, 48 is your DA, 6 lakh 48,000 has been paid by you every month. So for 12 months, it was 77 lakh 76,000. And we contribute 10% of it. That means 7,77,600. And exceeding 7,50,000 is going to be your PC. That is 27,600. Everything has been written in the study also. So you can see this. This is the way ABC contribution exceeding 7.5 lakh, that is 27,600 rupees. Now PC1 is nil because the last year contribution, if you will find out, is less than 7.5 lakh. Why it's less than 7.5 lakh? Because he has been appointed on 1st September 2020. So if you'll find his contribution, September, October, November, December, January, February, March, 7-month contribution, if you'll find that will not exceed 7,50,000. So technically PC1 is nil. And because PC1 is nil, that's why TP1 is also nil, because the taxable value is less than 7,50,000. So we need not to calculate that perquisite value. I upon F average, I was saying that how we need to calculate, that is closing balance, that is 71,46,000 of 31st March 22, because we are solving previous year 21-22. Deduct the contribution of employee, 771,600 was the employee contribution, same as employer contribution, and this is opening balance. So we will find I is 5,56,500. Then average is opening and closing balance, that is opening and closing balance of this previous year divided by 2, that is 60,90850. So our R will be 0.0914. We will put it into the formula and we'll find out the perk value of 1261. In the same way, when we'll calculate the perk value for 23-24, now we have TP1 is 27,600 divided by 2. Now we have PC1 value also. We have PC1 value 27,600 and TP1 value is the last year perk value, what we just calculate for assessment year 22-23. So that is 27,600, same PC value, same employer contribution value, our perk value. Now we need to find I upon F average, total perk value, total fund balance less contribution value and the closing value. So we'll find out our I is 755,800 and the average is opening balance and closing balance divided by 2. So that will also come 8302200. That will be our R. We'll put our R into these value and the final figure will be 3882. Again, let me tell you one thing. In your solution, you will find this value also. These are wrong calculation in study material. So just ignore it. This 5,48,600 should be 5,27,600. This value is wrong. This has been actually pasted from the last year's study material. It has not been changed. So 548,600 is not a value. The correct value should be 527,600. In the same way, again, these three values 548,600. Again, it's a wrong value. It should be 5,27,600. Clear? So do not get confused how this 5. Do not get confused as how this 548,600 has been come. It should be 527,600. This in second point also, it should not be 548,600. It should be 527,600. And again, over here also, it should not be 588,600. It should be 527,600. I know this is a quite complicated provision, and but you need to, of course, understand the whole process. In might be examination, it will come for 1 mark. So if it is coming in MCQ, you need not to know how to calculate the provision, what is the limit, etc. You will try this numerical once or twice, and you will get to know how to solve it. If there's any problem, then of course I will solve it in the next session. So you do one thing. My next session was earlier was on 8th. Now it has been shifted to 10th of November and 12th of November, where we will discuss the house property provision. So you should go through the study material of your study, of course. The notes I have been given to you. You have to read those notes twice. As I always say, revise twice. That's my advice to make you wise. So revise these notes. These notes covered each and everything. Practice the numerical questions or study material. Test your knowledge questions. Try to again solve the MCQ I have provided to you. If there's any query, any issue, we will solve it in our next session also. Salary is a huge topic as well as very, very important for your examination also. So let's see if there is any query. So there is no query. Gurleen Kaur is saying, sir, do you recommend any other book also for practice questions? I guess you should do all the question of study material, your question, MCQs, etc. And then you should go to the previous year examination question of your institute. That will be enough for you. So you should first learn the provision correctly, then solve your study material examples, then test your knowledge question, and at least 4 or 5 years, last 4 or 5 attempts question. You have to revise. If you can do this, if you can able to cover these provisions, definitely that is more than enough. You not need to refer any other book for that. Institute studies has been beautifully drafted. institute has done a lot of effort to make your study very nice. And it was wonderfully questioned. Each question is brilliantly explained by the institute also. So do not go for any other book, etc. Just remember my advice. You have to solve the institute questions material, and again mock test question you can also download from the institute portal. You can solve that also, and last previous year or previous 4-5 attempts question. You have to try them. If you're able to try them, definitely you are going to solve all the question of your examination. That will really going to help you. So today was the last session of salary topic. We will resume with our house property session. I believe you will complete your study homework, what I will given to you, and just take care of yourself. And we'll meet again on 10th of November.